Okay, we're going to talk through some, or the, not some, the different item types that are available in QuickBooks. So I'm going to come in here to my items and services list. And I have some set up in here already, but I'm going to go down here and select new so we can talk through the different item types. So these are different item types that are available in QuickBooks. Okay, similar to a chart of accounts, they each do things differently. If you don't see inventory part in here as one of the choices, it's because you don't have inventory turned on. So you go edit and preferences, items and inventory, right? And we want to make sure the inventory is active. Okay, service items. A service item is something that when you make it a service item, you can't change it to be in a different item type. The purpose of using a service item would be for doing things like I am a bookkeeping company, right? I charge my client for bookkeeping services. Okay, so it's a service item type. On a service item, you can make it a double-sided item. So we're going to come in here and make it double-sided. We have some more videos on this in the futures in detail in the more intermediate section. But this will allow me to say when I have income, post it to this account. When I have an expense, right, I want to post it to labor. So when I pay my employees, it goes to labor. When I charge my customers, it goes to income. Okay. So again, the best part about using a service item type is when we're running reports. You can run reports and total by, so when I look at my item summary, notice how it totals by inventory part or inventory types, assembly types, and service types. Okay, so that's going to be the biggest purpose of using that. We also have our inventory parts. So we would use inventory parts if these are items that we are going to put on our shelf and keep track of their quantity on hand. Okay, so I buy a part and I hold it in my inventory as an asset, and then I sell it. The cost does not hit my P&L until I sell it. So the cost hits at the sales transaction when you create the invoice. Okay. So that's an inventory part. And again, we have much more detailed videos on these. Then we have our inventory assemblies. These are going to be things that I have components that I buy. I put them together, and then I put the finished good on my shelf, right? So I want to track, I have 10 built bicycles. They're on the shelf. Okay. When I set up an inventory assembly, I go in and I assign my inventory parts, right, or components to those assemblies. I can go full view here, right, and I can say I add 3 of these, 2 of those. You can also add assemblies to finished good assemblies. So you can add an inventory part, or you can add an inventory assembly type. You can also add services and other things too. Okay, but an inventory assembly is going to require an extra transaction in QuickBooks. You're going to have to build the assembly, right? Go in and say, I'm going to put, take my separate tire and, handlebars and everything like that, and I'm going to put it together. I'm going to build it and then put it on the shelf as a finished good before I sell it. Okay, so that's an inventory assembly. Then we have a non-inventory part. The non-inventory part looks very similar to the service items. These are going to be things that we don't buy and put on the shelf, right? These are going to be passed through. So as an example, we sell QuickBooks software, right? I don't buy the software and stick it in my inventory. I buy it and sell it to my customer. So we have it as a non-inventory part. At the time of purchase, we put it to a expense or cost of goods sold account. At the time of sale, it's going to hit our income account. Okay, that's what makes it different than an inventory transaction, right? Because at the time of sale on an inventory transaction, it relieves it from the asset and hits cost of goods sold at the time of sale. Whereas a non-inventory part, at the time of purchase, it hits the cost account, and at the time of sale, it hits the sales account. Okay. Non-inventory part. Then we have an other charge. These are usually, I mean, you can do the same thing, looks like services. Again, it's just a way to subtotal on reports, right? Why we would choose a non-inventory part versus another charge versus a service. It's the way that it looks on reports for us. So an other charge, good examples of that, setup fees, handling fees, right? Delivery charges. Okay, so those are other charges. Then we have a subtotal item. So I'm in Enterprise again, so there's a piece of this that is not in Pro and Premier, and we have, again, much more in-depth videos on how to set this all up. A subtotal item is basically going to allow you on a transaction to create a subtotal line, right? You have 3 lines on an invoice. You want to have a subtotal on the invoice, so it'll total those 3 lines above it, okay? And you can total amount, you can total quantity, you can total cost, right? All the different columns that are on the transaction, you have the opportunity to total them, any of the ones that are numbers, okay? In Enterprise, you can add custom fields that are number fields, and you can total those as well. So for things like, cubes or weight or anything like that. And in Enterprise also, you have the ability to multiply times the quantity. So if a cup, right, weighs a pound and somebody bought 12 cups, I wanted to calculate that it should be 12 pounds. In Enterprise, it'll do that for you. And then you can also total, do the total of the quantity. So subtotal items would be used if you want to subtotal anything on an individual transaction. It's not the total of the entire transaction, right? Because that'll show at the bottom. It's just if you want to subtotal anywhere along, 3 lines, the first 3 lines I want to subtotal, and then I want to continue with some more data, subtotal again, and then I'd have my final total at the bottom. Okay, we have group items. Group items are items that you want, so these are different than build assemblies because you're not going to put them together and stick them on the shelf and know that you have 10 bikes on hand, right? This is going to be, these are things I frequently sell together. So I usually sell a cup, a canister of coffee, and a spoon, right? Those 3 things are grouped together. Okay, so a group, there's a couple options that we have here. We can choose to print the items in the group, right? You want the customer to see all the items in the group. Or maybe this is something like Mother's Day special, right? Where you say, I don't want to print the items in the group. All the customer sees is Mother's Day special. But internally, we know that that includes, this part, that part, and this part, okay? So again, not going to assemble them ahead of time and know how many Mother's Day specials we have on the shelf. It's just at the time of sale, right? It tells us internally when we look at it on the screen, what are the 3 things that goes into a Mother's Day special. The client doesn't necessarily need to see those details. And we have a pretty elaborate video on groups versus item assemblies in more intermediate videos again. So then we have a discount item. Okay. So the reason you want to set up a discount item is so that you can track your discounts, right? I got a Groupon discount that I'm giving out. I've got a 10% off discount from my newspaper ad, whatever it is. That way you can add it to the transaction and we can run reports to see how much money we give away in this discount versus that, or maybe how much income is made from transactions that have those discounts, okay? So on the discounts, we can do an amount or a percentage. If I put 50% in here, it's going to give it half off. And then, of course, you would choose like a contra income account as an example, meaning it would be an income account type, but it would be a negative when you look at the P&L, right? Because we're discounting. Okay, and notice that it doesn't have the options on discounts like we do on other charges, right? To make it double-sided, because there isn't, a discount is a discount off of income. This is not, if your vendor gives you a credit back because you paid early. Okay. And then we have our payment account types or item types. So payment item type would be if you want to on the transaction. So I have $500 in bookkeeping, and on the transaction, I want to show negative $500 that they've paid already by ACH. Okay. So it'll make the transaction a $0, And what we do is we say, ACH payment as an example. The payment method, we choose e-check. And then you have the option to put it in undeposited funds so that you can group them together to make your actual bank deposit. Or you can say, just deposit these into my checking account. So maybe it's a wire, right? You're not going to group wires together. The wires just hit the bank account individually. So that's going to be a payment account type so that you can put the payment on the transaction. There's not very many of my clients that actually use this, but you do have that available. Okay. So those are the different item types. Again, look for other videos for more specifics on how you can use these more effectively, but that gives you a high-level overview.